Hello and welcome. My name's Ray, and today we're going to go over a couple of things. Going to have a look at our overall position, taking a look at the market. We've still got the virus going on around, some stimulus, and having a look at a couple of things with the economy. So let's get into it. Over the past couple of weeks, taking a look at my total net worth, we've taken we've taken a hit. At the moment, sitting at $82,900, down from in excess of 100K, and that's around about $20,000 gone in a month and a bit, month and a half, $20,000. Uh, we could see that the majority of it would be through uh, shares, 12K in shares, supers being affected as well with $3,000, and we're taking on a little bit more debt as well than previously. So if you take a look at the breakdown here, the past month or since March 1, down $12,000. Since February, down $16,000. And breakdowns, got some more debt sitting at around about minus $4,000. Spaceship is still increasing, shares decreasing, super decreasing, and the amount of cash on hand is also decreasing, but that's being used elsewhere. So having a look at this, I'm still holding on to my investments. I'm holding on to my investments even though the market has dropped over 20%. Looking at the past 6-month graph, so you can actually see it better, or the year graph, you can see for the majority of 2019, we've had pretty steady increases. For the 1 year, up around about 15%, but then we've dropped 22% in 2 months, 1 month nearly. 22% in 1 month, and that's okay. That's okay. Even though this drop of 22% is worth around about $16,000, there is less likeliness that it's going to fall more than 20% again, say down to the minus 40, minus 50% since previous highs. Some of the reasoning behind that would be those staying or those already affected or not having, say, a strong stomach have already sold out into cash positions. And as time goes on, you can see more people going to cash or different types of investments like bonds and things like that. And as time goes on, there's these bigger drops as well. And say someone might be able to handle 20%, but any further than 20%, no, they're out. So that would be invested through all of these positions and then dropping or selling out as it drops below 20%. And that just continues and continues on. And with that, as the market has dropped, a lot of companies are also a lot cheaper. People trying to find their way into the market as well. Is this the bottom? Was the 12th of March the absolute bottom that the market's going to be, and is it going to rocket back up? Frankly, we don't know. As a whole, say, investor community, we don't know when each other person is going to place in their money. and that's it's not good to try and, in other words, time the market, because you're going to get burnt if you try. And it's more like a type of gambling or a type of trading. And one of the best examples was Friday, where market opens. So where I'm selected now is 10 a.m., the open of Friday. And on the way to the bottom, down 8%. That is a very significant drop. And during this position, I've seen or heard stories of people loading up on short positions of, say, BBOZ and BBOS, the uh, short position ETFs, basically, which inversely track what the market does. And so they buy into these short positions here, and later on in the day, it rises from the bottom up 13.5%. And that would just erode basically a lot of the short positions in this opening trade. And if you sell out, then you those losses are real. They're locked in. This initial loss this morning is not there because you're not in the market during this uh, during this drop. And those are the reasons why I stay invested. These gains um, are generally found during volatile times, i.e., right now. And if we take a look at another chart, we've got how timing the market can be costly. And the idea behind this is just if you are if you're investing and you're trying to jump in the market, jump out of the market, and on these drops here, you're just completely completely scared what's going to do, and you jump and sell out to cash during these positions, and then you miss these gains, and then you realize, oh, okay, the market's going to go back up. Let's buy tomorrow, and then the market starts going down again. You've basically bought at um, or sold out at a low and then rebought higher, which is not the idea of making money. And if we just have a look at this graph a little bit closer, those fully invested, um, whoops, just looking at the investments here. So missing the top 10 days, your gains are basically halved. Then just stay in. If you miss the top 20 days, you're only getting a couple of percent. And then if you're missing top 30 plus, then you're in negative territory. And looking at this time period, it's from 1998 to 2017. So that's like 20 years. Yeah, 20 years almost. And if you miss the top 10 days, you're only going to half your investment if you miss the top 20. And looking at hello, if you're looking at this day on Friday, starting from open, that's an increase of 4.4%, which is one of these top 10 days. So if if you missed Friday, then you're missing one of these days. So staying invested. Um, and at the moment, looking at the whole market, we are currently over 20% decrease, which means we are in a bear market. And just with the time of these bear markets, if we have a look at one of these charts, which I have shown previously, just a different type, you can see the bull markets, or times where the market goes up. It lasts significantly longer than the times where the market is going down. And just with these times where where the markets are going down, this does not necessarily mean a recession. Doesn't mean people are losing their jobs and things like that. That just means people are selling out of the market. And why do people sell out of the market? Because they're scared of something generally. So GFC, dot-com bubble, um, and we've got the gains in between. So we've got a bear market starting just after, well, this is 2017, but at the start of 2020 now, and they don't last that long compared to the bull market. So if we're already 20% down, we might hit 40, 30, 40, 50% down, and then we've got these gains afterwards for an undefined amount of time. But looking at the length of these, on average, bull market will last considerably longer than a bear market. So um, that's why staying invested through the majority of these and timing the market, you're not going to know when the bottom of the market is. So if you're in right at the bottom, then you're going to get a lot of these gains. If we move over to the next thing that I want to show, I've seen this a couple of times, how to time the market, and we've got three different people here. This is just a story of three friends who saved $200 per month, and Windows seems to be going off a lot. All right, whatever. And yeah, investing $200 per month or saving $200 per month and investing into the S&P 500, which is the American top 500 companies. And each of these people saved and invested over 40 years. So that's 200 a month for 40 years. And just the way that the strategy works, or each person applied a different strategy. And we've got some of these market crashes and bear markets here. So Black Tuesday, Kuwait War, dot-com crash, and financial crisis over these 40 years. And if we have a look at one of these people, Tiffany, Tiffany saved $200 per month and waited for finding like the best time to invest. But as an explanation, Tiffany dumps all of her money into the market at the peak, which if we have a look at the ASX 200, that would be basically right here, right at the top before this 22% drop, etc. Wow. And yeah, so she invests at the peak right before these crashes, which right now, the next one's here. So Tiffany would have dumped her money in. At the moment, her savings account is earning 3%. That's minuscule. But she still ends up with $663,000 after this 43 years, only investing 96K. So that's basically almost 7 times. 7 times having the world's worst timing and investing with a buy and hold strategy. 7 times after 40 years. If we have a look at Brittany, Same $200 per month, 3% interest, but has the world's best timing. And she bought at the bottoms every single time and turned that $96,000 into $950,000, 9.5 times. So got 1.5 times more than Tiffany. Um, and last person, Sarah, using a dollar cost average strategy, investing $200. So with her $200 saving, she's investing it directly into the market per month. And yeah, she earns $1.3 million or $1.4 million with the $96,000 that she has. So on the ups investing, on the downs investing, it might help that we've had one of the longest bull markets, or it's not ending with a bear market, so that still works out there. But dollar cost averaging, having the money in the market so the money can work and generate more money, rather than sitting in a static 3% interest in your savings account. So summary of it is, even if you pick the worst, you're still gonna make money. Even if you have the best timing, you're still gonna uh, be well off. And if you dollar cost average, then you're gonna come out well. Just be in the market. Um, and yeah, that's just basically the summary of it. Time in the market beats time out of the market, because you'll miss these these days here, which is one of the best days we've had since either 2008 or 1987, one of those two, but 4.4% does not happen often. So moving on, we've got the coronavirus as well, that's still going on. At the moment, 170,000 cases, which over the past couple of weeks has been sitting at 100,000 really. The rest of the world has been getting gradually more infected. You can see total case curve is starting to reach exponential points, and same with deaths as well. The amount of people being confirmed is increasing over time. And if we have a look at the countries above 1,000 as well, China, Italy, Iran, South Korea, those were the top four previously, and we're joined by a couple of other countries as well: Spain, Germany, France, US, Switzerland, UK, Norway, Netherlands, and Sweden. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 European countries. 1, 2, 2, yeah, two Asian countries. Got a Middle East, and we've got a North American country as well. So Europe is starting to break out a lot faster than China was, and we're starting to be joined by a couple of more countries as well. The amount of countries between 1,000 and 200 are increasing as well. We've got a couple more European countries as well. Japan's been up there for a while, but we're not seeing that exponential growth. We've got the big boat there, just as a decent breakpoint between countries, and then we start going down more Asian, European, and Australia, sitting at 300 cases with 5 deaths as of Monday today. So things are starting to get a little bit more dicey. It doesn't take long to go from 300 all the way to 1,000 and above. Italy's got into 24k pretty fast, and will we see Italy pass China eventually? We don't know. Um, but they'll need to stem the bleeding soon. Um, Otherwise, they're going to lose. Well, they've generally already lost track of all of these people anyway. Um, and some things relating to Australia about the virus. We've got mandatory self-isolation when you arrive back to Australia. So I believe this was out on Sunday. This is Monday. Yeah, so Sunday, any person coming from overseas will go straight into isolation. Um, and it's basically law now. So if you're going around and not obeying that, then you can get fined, etc., etc. So go into isolation when you come back from overseas, and that's going to cause some troubles. But basically, that's what I was looking at afterwards. But this follows New Zealand's lead after they announced that they were going to cause anyone going overseas or anyone returning from overseas, even those from New Zealand already, to go into isolation, and that's going to cause some travel issues. Because say if you're going to fly to New Zealand for a holiday, and when you get there, you're going to be isolated. So if you say you only have 2 weeks off, there's no point in going because you're going to be isolated for those 2 weeks anyway. So you might as well save your money. And that's going to be the same for Australia. There's one person that I know that's currently overseas and was on holiday for 2 weeks, and yeah, returning back is not going to be able to go back to work immediately as they are going to go into isolation. So how many people are on holidays overseas right now? We don't know, but when/if they return, they're going to have to wait another 2 weeks before they can do anything outside of home. Um, the next thing we've got is some local cases. We've got KFC shutting one of their restaurants due to a staff member testing positive. So companies are going offline, and we've got, aside from KFC, we've got Target as well. One of their team members testing positive. So this one is at Carindale. So Target Carindale, and now there's another store offline. Um, some things to note about these stores going offline. It's there's been a debate which I've had talks to some people with about the state of casual workers. So casual workers, the idea is that they don't have uh, annual leave or sick leave in majority of cases, and it's more like you earn what you work, and that's all good and well due to mainly being compensated for what they work with their pay, generally earning more than their part time. But if they are sick or they need to go on leave, they don't get anything at all. That's the role of a casual worker. So looking at these stores like Target, which has to shut down immediately after one team member tests positive, then you've got all of these other people which may or may not be isolated. Sorry, which may or may not be infected, but they're currently unable to work at their own store because they've been exposed to this one team member and now they can't work. But there's still bills going on, they still need to eat, there's still rent that needs to be paid weekly, but you can't work and earn. So casual workers are in a bit of a pickle here because not necessarily there's an event where if you get exposed to this virus, then a store goes offline. Because if you're sick, then generally if you're sick, okay, that one person stays home and the business can continually earn money. But this case, due to the infection rate, then these companies are going offline. That's the biggest difference between the flu and what we have now. So people aren't able to earn when stores go offline, and with those people unable to earn, they're not able to go and spend, let alone work at another store because this one store is closed. But there has been some good news. So here we've got the government stimulus, generally getting money out to people and businesses as well. $750 going to unemployed, those on welfare, and those on the pension as well, I believe. Yep. And the idea is getting the money to people who basically need the money. And those people that need the money would go out and spend. I do find a little bit of a problem here. They are trying to keep the economy afloat, but it would be hard to spend the money if you're stuck in isolation. That's one of the problems there. But I do find it fine that people in need who are getting money. It does note that this does not mention casual workers at all, which could go from like a steady income to nothing. And these people who are not working at all are getting money. That's one of the problems finding here. For those in middle income, high income, they don't need the $750. Example, if I got that $750, that's going straight to the market, or I'm saving it, or I'm using it to pay down debt. So not really what the money is intended for. So I'm okay with that. But aside from the government injecting money into the economy, there's also the RBA, which is injecting $8.8 billion, generally through banks. But more money going into the system as well. And I guess one last thing to note, some good things which I wanted to mention earlier. Some companies are actually paying casual staff leave. So, um, what is it? Woolworths has 55,000 casual employees, and West Farmers for Officeworks, Kmart, Target will be paid as well. Some companies might not be at this point in time paying casual staff leave for staying at home to protect the business. We don't want that person being disadvantaged, but some companies might not have confirmed cases within their businesses, so they might not be at this point yet. So don't be as concerned, but it's good to see companies uh, helping out those who are in need, basically. Um, I guess a couple of last things. Uh, yeah, just don't don't panic. Don't panic. Just stay calm. The sight of losing $20,000 might not be the best, but um, stay invested. Stay invested. I guess one last thing that I would like to mention, um, just with Spaceship. So Spaceship, uh, at the moment, I'm changing my strategy a little bit. So if we have a look at our overall, our shares have dropped a bit, but at the moment, currently not sitting on that much cash, and debt is higher than normal. Um, so for me, I have a $6,000 credit cap. So at the moment, I only have $2,000 left on the credit card, and cash, I'm only sitting at $400. So I don't have that much money to work with, where with the share market, generally you need $500 minimum to be able to buy companies on the stock market. So at the moment, I don't have $500. I don't have that much money left on the credit card anyway. I'd rather have this closer to zero than higher. And it's going to be a little bit more difficult to throw money into the share market right now through the use of brokerage. But with Spaceship, that's a little bit different. You can actually invest smaller than $500 amounts. Since previously I started off with $5 a week, so this is 4 weeks for this $20. Then I jumped up to $25 a week, and with the market dropping a little bit more rapidly, and we've got these downs and down days and up days, down days and up days. I'm changing from $25 a week to about $50 a day. So if it goes on for a week, okay, cool, invested. This doesn't include, so this will be actually 6 days a week, so not including one day, which I believe is Sunday, as between the Australian and US market, the US market would still go on into Saturday morning. So, so Saturday morning prices will change. Sunday wouldn't generally, but then we're back to normal when the market opens on Monday morning. So $50 a week is, sorry, $50 a day, which would be $300 a week. That is fairly handleable. I've paid off all of my bills. I'm going to throw a lot more money into Spaceship as well, as we're approaching the lows, or the so-called lows, but I'm not gonna let up on this new strategy as we want to flow more money into the market and pick up these cheaper companies than they were previously. So doing that at $50 a day and just maintaining debt, etc., until markets start rising. When markets start rising again, whenever that may be, we'll start to take the gas off the pedal as the market would be doing the majority of the work to keep things afloat or keep the net worth uh, in positive territory. So even though we might see a $12,000 drop, as soon as this ends, we're going to see green for a bit as the money that has exited the market is now flowing back into the market. But yeah, I believe that's going to be it. We'll see what happens this week. What news will come out? Uh, will we start closing schools? Will we join a full-scale lockdown? Will Sydney go into lockdown? Things. These are the questions that might be asked, which have already taken place in other countries, but has not happened here in Australia yet. Um, will will people start losing their jobs a little bit faster? Will there be a shock in housing? There's so many things that are coming out with this event here, but we're gonna go through it. I'm gonna go through it. Well, I'm gonna thank you for tuning in, and we'll see you next week. Thank you.